So now indirect taxes, GST is what we are seeing now, but this has just come around the corner. I mean, I would say it's introduced in July 2017. But the taxes have been around for ages. Direct tax being the one which has been there in the ancient times when the king or those rulers used to take up in kind, which could be grains or gold or something. So that's direct taxes. Even indirect taxes were there, even pre-independence, post-independence, where customs, salt tax and everything. So GST is what we are seeing now. The current generation is going through the GST. But GST has come after a lot of taxes and disadvantages what we've seen over period.
Okay.
Major being the excise, customs, sales tax, VAT. So there was a multiplicity of taxes. More than 17 to 18 taxes were abolished after the introduction of GST. So this is like a consolidation of a lot of separate taxes. So one of the greatest example is the GST.
So these taxes, like the 17 taxes that were abolished, why were they set up in this way? Was it because after independence, each state had its own set of rules, so they had to apply their own set of taxes? Was it because of that?
Yes. So GST, the major reason for introduction of GST and abolition of the previous taxes were majorly two. One being multiplicity and difference in the regulations. So India is a sovereign country where there is a demarcation of collection and the responsibility of collection tax between the center and the state. So the Constitution of India gives the right of collecting certain types of taxes to the center, and there are rights allocated to the state for collection of certain taxes.
Okay.
So like petrol example, that's a state tax. So the responsibility or the right to collect the tax on something is with the state, and this is very clear in the Constitution. Because of this, there was a clear demarcation and hence different taxes. So for example, manufacturing was under the center's side. So there was excise and service tax which was collected and monitored by the center. So GST is what we are seeing currently, but it was preceded by multiple taxes between the state and the center. As I said that, a lot of taxes are allowed to the center to be collected according to the Constitution, and a lot of taxes are allocated to the state for collection. Now, if you take an example, to have what are the multiple taxes a good would go through in its life process of reaching ultimate customer. If I start with a simple example of a shirt or a fabric or a ready t-shirt. Now it would start from the yarn, which is it's a thread which is produced. The yarns are converted into a grey cloth by the process of weaving. It goes through the dyeing and it comes out as a finished cloth. Yeah. It then goes for stitching. It comes out as a ready to wear accessory. Now, if I look at the stages of this manufacturing, to start with, excise was the first point of tax, which is on the manufacturing. So once you manufacture a good and the first point of sale, that would make it liable for excise. Okay. So excise was on the manufacturing. Once it starts its channel for the reselling part of it, so a finished product, when it goes to the market, it passes through the distributors, then wholesalers, retailers, and then ultimately it may reach the consumer. So this channel of resale, where it passes one hand, originally it was sales tax and the central sales tax. So there were two taxes, the state tax and the central sales tax, where they shared the revenue on this transaction. The state would share the revenue if the goods are going outside a particular state. And if there's a trade within the same state, there would be a sales tax. Okay. The sales tax was then included or maybe merged into something called VAT, which is called a value added taxes. Okay. So as I said, the introduction of GST had two reasons. One was multiplicity of tax, and the other biggest reason was non-transfer of credits. In very simple words, if I say for example, I am a trader and I buy goods and I sell them in the same form. It's like a retailer. So when I'm buying a particular good, I would have paid taxes on it at the time of buying to the vendor. Right. So the vendor charges me X 18% of tax on my goods. So he would charge me 118. So in a very formal or a very basic thing, you would say that 118 is my cost. Yeah. And then maybe I may mark it up with say 20% and I sell it further for 120 rupees. And I will charge further 18% on it. Now earlier, because of different taxes, the tax which I paid to my vendor, I was not able to use it for discharging my taxes when I collect it for someone. So it's like an offset mechanism, which was not possible earlier, because a lot of taxes are monitored separately. Someone was monitoring state, someone was monitoring center, and there were different taxes. So GST's purpose was to allow a seamless flow of credit from start to the end, and the major advantage of this was avoiding the cascading effect. You know, the word is cascading, it's not a jargon, but it simply says tax on tax. So when I say if I take 118 as my cost and I'm not allowed a benefit of that 18 rupees, so it forms part of my simple cost. What I would do is I would try and inflate my selling value so that I'm able to recover that 18%, and I would charge margin on my 118, which leads to inflation. So basically when I sell it, I would charge tax on the earlier tax.
Right.
But say for example, if government allows me to use that 18% and say that okay, your cost is just 100, you use that, collect that 18 rupees, and when you sell it, whatever tax you collect from your customer, you offset that thing. So for example, you are charging 18% on 120. Whatever taxes you collect, you offset that previously paid 18 and pay only the difference to the government.
Right.
So in this whole process, what advantage you are getting is that your cost is reducing. So there's no inflation, there's no cascading effect.
Right.
So that was the challenge in the earlier scenario when there were multiple taxes, multiple rates, multiple states charging differently. So there was no flow of credit between the two states. When I'm already on the discussion on the flow of credits, a simple example could be interstate versus intrastate. A trader who's trading within the same state, I'm buying from Maharashtra and I'm selling within the Maharashtra. The Maharashtra government would be fine in giving whatever taxes credit they have received in the first stage at the second stage. But when the goods actually move out of Maharashtra and the trade is between Maharashtra and Gujarat, the goods are moving out to the Gujarat. Now the Maharashtra government and Gujarat government will have a conflict. Who would get the taxes on that leg of the transaction? So there were always a challenge in passing on the credit, and in turn, because of this, the credits were not available and it led to inflation. So to overcome all these issues, one major other factor which led to the introduction of GST was OCTROI. So as I mentioned, that excise is one thing at the manufacturing part, VAT and sales tax at the resale part. The third leg was the OCTROI. I'm not really sure whether my audience who's listening could be of age of 18-20 would have heard about OCTROI per se. But the senior generations, OCTROI was a dreaded tax, simply for two reasons. Major, that it was an entry tax. So OCTROI was levied when goods were moving from one state to the other. So at each border of a state, there were check nakas. And the OCTROI officers, you need to have a pass or a tax receipt to cross the border from one state to the other. So when goods are moving from one good state to the other, you are levied a taxes to enter the other state. Because of that, there was a huge backlog or a traffic, or I would say delay in transit of goods. There was huge corruption or some kind of a challenges at the border checkposts. This led to delay in transit, higher cost, higher fuel cost for the industry, and always, it discourages movement of goods. So that has been abolished, and now it's a seamless flow of credit and the transit. So goods which are now moving from one state to other need not wait at the checkpoints. Though there is a bit of a control by way of e-way bills and certain other documentation, but it's more from monitoring purpose and not on a complete basis. So after the introduction of GST, this is one of the greatest advantages where the time of transit has reduced, the cost of transit has reduced. So going back to the initial question, that there was excise on manufacturing, then there was sales tax and VAT on trading, there was OCTROI at the entry point. Major other tax which was subsumed was the service tax. Service tax, as we were discussing about the manufacturing and about goods. Now, the people who were providing services, it could be starting from freight, consultants, it could be anything what your freelancing. Freelancing is a major service what we are seeing right now. Professionals, anything which is other than goods was a service. And there was a separate service tax which was monitored by the center. Conflict between goods and service has been a legacy challenge for the courts. Over years, there have been huge number of cases for a conflict between whether something falls under goods or services. You know, as for an outsider, it is very simple that this is a good and this is a service. But the laws in India are not such. They are so complex that, you know, there were multiple case laws on this. Huge litigation, which is now been settled by introduction of goods and service tax, which says that, you know, same tax on goods as well as services. So, though there is a bit of a difference in the rates and the classifications, but the monitoring of the taxes in the one window. When I was speaking about the flow of credits, so as a chartered accountant, I'm a service industry person. Now, while I'm giving my services to my clients, I would be charging service tax and paying it to the government. But while giving that service, I consume a lot of goods as well, starting from stationery. It could be computers, servers, office equipment, softwares, ACs, lot of stuff. You know, I would be paying a lot of VAT and service tax on the goods which I'm using for actually providing my services. But because these were two different taxes, I was not getting any benefit. So whatever taxes I paid on the good side of it, it was a cost to me. So no benefit. But today, after GST, I can pull out any goods, you know, and I can use, subject to certain limitations, I'm able to use those credits.
You get a rebate for that.
I get rebate for it. Okay. So I get a credit for it basically. So I can use it to discharge my output liability.
Yeah.
So this abolition has created a lot of synergy in the businesses. I'm really sure that, you know, barring the initial hiccups of introduction of GST when it was a new tax, after almost 5-6 years of GST, it is now settled and industry has accepted it. The proof of it is that the GST collection has, you know, the monthly collection of the government is more than 1 lakh crores a month. So that's huge taxes what government is collecting now.
Yeah.